Welcome to a brand new trading month of July. And yesterday we saw window dressing session in the US stock market, where all the four major US stock indices closed in the green. But however, from a monthly performance basis, they are still ending on a negative performance for the S&P 500. And what's interesting, the US dollar continues to remain firm as the Aussie dollar, the Kiwi dollar, and as well as the dollar yen continues to show resilient US dollar strength. With this resilient US dollar strength, we continue to see fragile weakness in gold XAU/USD trading down by around negative 0.6% as we are speaking right now at 11:05 a.m. Singapore time, trading back below the psychological level of $4,000 US dollar per ounce. Welcome back to today's Daily Dose of Market Insights. Today will be the Wednesday, the 1st of July 2026, as we kickstart a brand new kind of Q3. All right, so before we jump straight into the gist of today's Daily Dose, let's have a quick look at the disclaimer first. Leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exit deposits. This presentation is for general information purposes and is not investment advice. Past information is not representative of future results. Okay, so here we go. So now let's have a quick recap what has taken shape in the last 24 hours or so, and as well as in early Asia session today. All right, so let's start with the performance of the US stock market. Right, so let me share my screen. Okay, so what I could see over here is that we see a slew of green in the four major US stock indices. All right, so the SPX, the Nasdaq 100, the Dow Jones, and even the small cap Russell 2000 all ended in the green, led by, as usual, those stocks that are easily able to push the US stock indices into positive territory will be the mega cap technology stocks, where we start to see the Nasdaq 100, where we saw the Nasdaq 100 rose by 1.68% yesterday. And if you look at the performance of the key mega cap stocks, so we see a slew of green over here: Nvidia, Apple, Google, Meta. All right, so if we were to look at their monthly performance, okay, not that good. So if you look at their monthly performance, they are still down. All right, on Nvidia, Broadcom, which is down by negative 50%, Apple down by negative 7%, and Google down by negative 6.04%. So what yesterday movement I view over here is more like window dressing to allow the performance, we call it reporting, for various fund managers to be in a better limelight, right? So to keep their, what you call it, net open position showing positive by the end of the month. So if you look at the monthly performance of the S&P 500 very quickly. So if you look at the S&P 500 over here, so what we could see over here is that initially it went down to a low. Okay, let me remove this. So this 1 month candle. So 1 month candle, it went to a low of 7,237. All right. So in the last trading day or the last week of this month or last month in June, pardon me, they tried to actually push it up and allow the closing price to close near the opening price for the month. All right. So what I could see over here is that it ended the month at around the psychological level of 7,499. So, but if you look at the monthly candle, is something like a hanging man. So it's a hanging man at a hanging man, which is inverted, which is a hammer, but it's not at the bottom, but it's at the top of after 3 months of up move of the candle, starting from March, April, and May over here. So due to this window dressing, potential window dressing, it also causes the quarterly performance to be skewed as well. So if you look at the quarterly performance of the S&P by looking at the 3 month charts of the S&P, we start to see it's a very strong bullish candle on the 3 month chart itself over here because of the last uh, push that is being done on the monthly chart. If you look at the monthly chart over here, the 1 month chart. All right. So imagine if you could see that if the close is not close near the opening of the June monthly candle. Instead, it starts to close somewhere around this level here, right? This level. Okay, the quarterly candle will be a different candle, all right? It will be not so bullish at all, right? So it's, to me, I view it as a potential form of window dressing rather than a genuine change in the bullish sentiment, given the fact that the US dollar strength continues to remains intact over here. So what we could see over here is that the US dollar now has tried to do a U-turn, a bullish U-turn after trade. Okay, give me a minute. So let me change it up. Okay, so this is the US dollar index daily chart. So after 3 days of minor corrective pullback, the US dollar now is actually turning upwards right over here. So indicating there is still some form of global liquidity tightening condition. All right, at this point up, and also adding to the window dressing potential window dressing observation that has taken shape in the US stock market on the last trading day of the month for June, and as well as the last trading day of Q2. It has also been reinforced by this news flow stating that there's some positive talks in Doha. So this is the second leg of so-called the roadmap negotiation talk between US and Iran to cement a permanent peace deal resolution over here. So the US negotiators, Judd Kushner and Steve Witkoff, reported had positive discussion with regional leaders in Qatar, and technical talks with Iran are moving ahead. So they said that progress is being made, but major issues still remains, such as the release of Iranian assets. That means, Iran is still being sanctioned, and as well as the most sticky point is the future management of the Strait of Hormuz remains unsolved, because in the last 1 day or so, there's a report stating out from the deputy foreign minister of Iran, stating that they want to have some form of control over the Strait of Hormuz. That means dictating toll fee that it's going to be imposed on various ships that were to use the Strait of Hormuz to do transition, we call it transiting of oil supply over here. So this still remains a sticky issue. So if this gets unresolved and in the next few days things doesn't turn well as expected, and worst come to worst, there could be some form of what I call minor conflict that has taken shape, very similar to what we see on last Friday. That could also potential derail whatever window dressing risk on sentiment that we've seen in the past 2 days to reverse down towards the downside potentially. All right, so this is something that I would like to highlight over here. So with that, covers the first segment of the daily dose. So let me move on to the second segment, where I will share with you guys the various interesting technical setup on the respective selected cross asset classes. So let me expand my screen before we do that. Okay, give me a couple of seconds. I think the screen is a bit slow right now. Okay, give me a minute. Hopefully things get better, because it seems to me that it's a bit slower. Okay, so let me expand the screen. All right. So let me touch on the FX market first. Okay, starting with the dollar yen. So the dollar yen continues to head northwards, despite the slew of verbal interventions. Like I mentioned yesterday, is that verbal intervention is ineffective, because we start to see a broad-based dollar strength. And if the Japanese authorities were to be physically in the market right now, in the FX market, buying up the yen, selling the dollar, it will also be rather ineffective as well of using capital to be deployed, because they can't potentially change the cost of a broader US dollar strength supported by a potentially hawkish US Federal Reserve, where market participants are looking for them to potentially hike interest rate as soon as September or October this year. So what we could see is that a very strong pushing above the previous major resistance swing high of slash 10 July 2024 high, that is 161.95, and that also induces prior BOJ actual intervention in the FX market at a point in time. So what we could do is that yesterday we do have a pivot at 161.70, and right now it's hitting our resistance level. So we got to tighten the pivotal support level to 162.30 today. So remaining a bullish bias for the dollar yen on an intraday basis using 162.30 short-term pivotal resistance, short-term pivotal support level. I repeat again, maintaining the bullish bias on the dollar yen intraday basis, tighten the short-term pivotal support to 162.30 today. Above 162.97, which is the upper limit of our resistance level, exposes 163.26, which is a one-time Fibo extension of this bullish impulsive upmove sequence that has been in place in 12th of June. So the upper limit of this minor ascending channel drawn from the low of 12th of June. Above 163.26 exposes 163.80, which is a bunch of Fibo extension level, cluster level on the upside. Only a bearish breakdown below 162.30 will negate today's bullish tone and see a slide back down towards 161.95 slash 161.70, which is exactly the minor ascending channel support, right? So that's for the dollar yen updated levels, still maintaining our bullish bias. Next up will be the Aussie dollar. So the Aussie dollar did a nasty squeeze up above our Titan short-term pivotal resistance level yesterday, but can't break above 160, can't break above, pardon me, 69.30 before shaping that bearish reversal downwards and reintegrate back below 69.05. So hence, I would say that yesterday push up is more like a bull trap over here, that single bar bull trap that has taken shape right at the start of the US session before erasing all the gains in today's Asia session over here. So what we'll see that bullish momentum got die off and the bearish trend continues over here. All right, so I will use 69.30 as my short-term pivotal resistance for today. So this will be like an intermediate resistance, 69.05. Okay, still maintaining. Okay, 6905. So still maintaining a bearish bias stance for today, given the fact that yesterday is a bull trap. 6930 short-term pivotal resistance level. First support level to watch will be the very important critical zone of 6863, 6843, which is also confluence with the 200-day moving average, breaking down below 6843. That will potentially open up scope for more potential bearish momentum to float into the Aussie dollar. In first step, exposing the next near-term intermediate support zone of 68.14, 68 figure level, psychological level, and a bunch of Fibo extension cluster level on the downside. And if you go back in time, it's also the minor congestion area of 22nd of January 2026. Only a bullish reversal back above 69.30 will eradicate today's bearish bias view to see another form of a squeeze up, which is a mean reversion corrective rebound on a short-term minor time horizon, back up towards potentially 69.60 slash 69.85. That is coming very close to the downward sloping 20-day moving average. All right, so that's cover the FX segment. So let me now touch on the stock indices segment over here. Right, let me expand the screen. So for stock indices segment, let us start with the Japan 225. So the Japan 225 continues to be in a bearish reaction mode. So still recall that yesterday we do have a short-term pivotal resistance level, 71,735, which I do not want to turn it all the way down to 70,700, given that it still can't break below the 20-day moving average. So at the start of today's Asia session, right at 9 a.m. Singapore time, it did that bearish reversal candlestick as intended over here, kind of erasing last night US session gains, all right, over here. So this is indeed a short-term pivotal resistance that we got to respect at 71,735. So still using 71,735, maintain a mild bearish bias view, given that it hasn't broken below the 20-day moving average. First support level to look out for will be yesterday's Asia session low over here, at 69,715. Let me put it in writing. 69,715. Okay, breaking below 69,715 will open up scope for a retest of at this juncture. Very key, important near-term support zone, intermediate support zone, pardon me, of 68,735, 68,089 over here. So this is also the level that the market managed to survive since 23rd of June and has been tested three times, at least three times in the past. So this will be a very important level. So if you start to see a breakdown below 68,089, that means i.e. there's much more higher odds that the bears are in control for it to take it down lower to 65,880 in the days ahead, which is the 50-day moving average. However, if price action don't move down as intended and start to do a bullish reversal back above 71,735, bearish buyers view will be invalidated to see a squeeze up to retest the current all-time high area in the first step or zone at 73,577, 74,025. All right, so that's for the Japan 225. Now let's have an update on the major US stock indices, starting with the US Wall Street 30, representing the Dow Jones Industrial Average. So yesterday, the US Wall Street 30 didn't move that much because the movement was being centered on window dressing for the mega cap technology stocks. That is for them to potentially easier to form a positive bias on the S&P 500 and the Nasdaq 100, whereas the Dow Jones Industrial Average doesn't have a significant market cap weightage on this mega cap technology stocks. So hence, it start to show this lackluster movement below the 52,635 short-term pivotal resistance that we highlighted earlier. So still maintaining a mild bearish bias on the US Wall Street 30 using 52,635 as the short-term pivotal resistance. First support level to watch will be yesterday's intraday session low during the US session, where it managed to survive at the start of it, 52,150. Let me put it in writing, 52,150. So breaking below 52,150 may open up scope towards 51,690. That is so confluence with the rising 20-day moving average. If price action don't move down as intended and starts to do a bullish reversal right above 52,635, then I'm going to respect the bullish momentum for the start of a new bullish impulsive upmove sequence for it to test the next intermediate resistance level, which is a Fibo extension cluster level as well, 53,030, 53,045 in the first step. Above it exposes 53,485, 53,557. Okay, next up will be the SPX 500. So the SPX 500 did a squeeze up above our pivotal resistance level that we have yesterday, pardon me, at around 7,480. But it did a squeeze up, but the squeeze up can't break up above this descending trend line that has been in check since the all-time high of 2nd of June, where it got rejected previously on 15th of June and 16th of June. And it did a rejection again yesterday, right? So hence, given such movement where it can't surpass above this minor descending trend line resistance, and also with the hourly RSI breaking below a parallel ascending trendline support. So this, excuse me, this hourly RSI is also in line with this ascending trend line on the raw price action over here, okay, which is corresponding right exactly at the 50-day moving average, right, around 7,480. But if you put it in parallel, the hourly RSI has shaped a bearish breakdown. And we know that RSI is a derivative of price action, raw price action. And being a derivative, it tends to have a leading element. All right. So given this bearish breakdown of the parallel ascending trend line support that's being depicted on the hourly RSI, indicating a lack of upside momentum, and also being shown on the negative reaction off from right below the minor descending trend line resistance that's being seen yesterday towards the end of the US session. I will flip to a neutrality stance for today for now. So neutral between 7,545 and 7,453. So 7,453 also confluence with the 20-day moving average. So a reintegration back below 7,453 will indicate that yesterday's push up is indeed window dressing and a bull trap for it to float down lower in first step towards 7,404, which is the 50-day moving average. Breaking below it may expose 7,333. So that's for the key levels and trend biasness to take note of for the SPX 500 for today. Next up will be the Nasdaq 100 over here. So if you look at the Nasdaq 100, if you are to draw the descending trend line resistance as well from the current all-time high level. It's something like this. It also got kind of rejected as well, very closely at this 30,530. So yesterday we do have a rather short-term pivotal resistance at around 30,100 level, 30,080. It got squeezed up towards the upside as well over here. So by squeezing up towards the upside, it kind of invalidate the near-term bearish momentum movement, all right, over here. And what we could see is that the hourly RSI didn't actually have that bearish breakdown. He hasn't broken down yet, kind of testing right now. Okay, hasn't broken down over here, but it starts to show a kind of lower high over here. Okay, that's a lower high. Okay, indicating a bit of lack of upside momentum as well. So with that, I also have a neutrality stance on the Nasdaq 100 for today. So neutral between 30,530, lower limit 29,800. That also confluence with the 20-day moving average and right exactly at the intraday low of yesterday US session. So only a bearish breakdown below 29,800 will indicate that yesterday movement is indeed a window dressing bull trap movement potentially. Then thereafter exposing the next intermediate support at 29,406, only breaking below 29,407, pardon me, 29,407 may induce further weakness to test the critical support zone of 29,047, 28,900, where the price action managed to survive since last Thursday, 25th of June, sell-off situation at that point in time. So that's for the Nasdaq 100 key levels and trend biasness to look out for. So turning neutral for now between 30,530, 29,800, watching closely the lower neutrality limit at 29,800 that confluence with the 20-day moving average that got reintegrated above yesterday. All right, so that's for the Nasdaq 100. Next will be the update on Gold XAU/USD. So Gold did exactly that retest on 40,031 before shaping that bearish reaction of it, trading down below the 4,000 psychological level again at 3,981. So this is indeed a inflection level where the bullish move got exhausted and starts to trade downwards. So no change, watching closely 4031. Short-term pivotal resistance, maintain that intraday bearish bias move. First support 39.34, followed by 38.86 in the first step. Only a bullish breakout and an hourly close back above 40.31. Then today's bearish biasness will be invalidated to see a squeeze up to retest last week high at 40.89. Breaking above 40.89 will trigger off a minor mean reversion corrective rebound sequence towards 41.40, maximum 42.20, 42, 43, that is confluencing with the downward sloping 20-day moving average. Right, so that's for gold, still maintaining a bearish bias view on this key inflection slash short-term pivotal resistance level 40.31. Lastly will be the West Texas oil. So the West Texas oil continues to trade lackluster sideways over here. So with that, the hourly RSI has started to broke down below a parallel ascending trendline support, reducing the conviction for a minor mean reversion rebound back up towards 75.25. So previously we are looking at 73.22, maximum 75.25 in the first step. So given this bearish breakdown of this hourly RSI, but still holding above 70.20.25 for now, I would flip to a neutrality stance for today. All right, so let me change this is a different color. Right, so flipping to a neutrality stance, so having a neutral bias for West Texas oil, neutral between 73.22 and 70.25 for now. All right, so that's for West Texas oil. So before we go, let's have a quick look at the economic calendar. What are the key data to take note of for today over here? So today will be the Wednesday, the 1st of July. So let's just very quickly go down the calendar. Okay, give me a couple of seconds. Seems to be hanging right now. Okay, give me a minute. All right, good. So 1st of July. All right. So let's go down over here. Okay, so later at 1 p.m. Singapore time, we have Japanese consumer confidence for the month of June over here. So that could potentially influence the dollar yen and the yen crosses, and in some form the Japan 225 CFD, aka representing the Nikkei 225. So market participants is expecting a slight improvement from 33.6 that was printed in May to 34. So if it comes in within expectation, there should be and not much market movement. So, but however, if market expectation starts to be lackluster, it could potentially influence negatively on the Nikkei 225 and in some form, the positiveness of the northward move drift up of the dollar yen uh, pair as well. And going forward into the European session, we have the aggregate Eurozone core inflation rate flash data for June. All right, so that will be at 5 p.m. Singapore time. So for core inflation rate flash data, the aggregated one for the Eurozone will be at 2.6% year on year, very similar rate from the 2.6% year on year printed in May. So that will be at 5 p.m. Singapore time, potentially influencing the euro dollar and the euro crosses over here. Then, as we head into the US session at 9 p.m., we have ECB President Lagarde's speech. That speech also come in line with Fed Chair Kevin Walsh as well. So market participants will be much more focusing on Kevin Walsh. So this will be his second public speaking after the previous 2 weeks ago FOMC press conference. So market participants will be pretty much sharing his his take on the current state of economic affairs in the US and as well as the global economy. So that could be a rather price sensitive event at 9 p.m. Singapore time, potentially influencing almost all the cross asset classes. So something to take note of. That will be at 9 p.m. Singapore time. Then thereafter at 10 p.m. Singapore time, we have another kind of sub tier one data from US, which we call the ISM manufacturing PMI for June. So ISM manufacturing PMI for June, market is expecting the same line of 54, but market will be looking at the sub-component, especially on ISM manufacturing prices, because this ISM manufacturing prices is considered as input prices or the manufacturing companies in the US put away that is that the cost of doing business. All right. So market participants expecting a slight easing off from the red hot number of 82.1 printed in May to 79. So if this number turns out more than expected over here, it indicate that the input cost for manufacturers in US continues to be on the elevated side. So that could actually prompt continuation of hawkish pricing by Fed Funds futures traders. So that it will be at 10 p.m. Singapore time, something to take note of. And for those who have interest in the West Texas oil on a very short-term intraday basis, at 10:30 p.m. Singapore time, we have the usual weekly EIA crude oil stockpile change that could potentially influence the intraday movement of the West Texas oil or the WTI crude oil. Right, so that is 10:30 p.m. Singapore time. So that pretty much wrap up today's daily dose of market insights. I wish you guys a great day ahead, and we shall speak again tomorrow. Thank you.